Okay, so good evening, guys. Welcome to the extension of the Head and Shoulders introduction. So hopefully we shall wrap it up today. Okay, so just to recap, the Head and Shoulders happened like this. So when market is moving in an uptrend, okay, and then you notice an outstanding high being formed before a shift of the market trend. So where is the outstanding high? It's this one. All right. It clearly stands out from the others. So why it's called the Head and Shoulders? Because how we trade it, we pick the immediate preceding high formed below it, and that's known as the shoulder. And this is known as this is known as the right shoulder. This is known as the left shoulder. Okay. Okay. So
Musomesa.
So don't put it there.
Eddoboozi liri wansi nnyo eriri simanyi lwaki.
Sorry guys, can you hear me?
Guys will not give you a reply because you muted them.
I've unmuted everyone.
Yeah. Okay.
Okay, so let's continue. So, and how we trade this, we're going to connect the lows formed regarding this, the left shoulder low, this one, and then that the higher low for this outstanding head. Okay, so you want to connect them. Once you do this, what you form is known as a neckline. Okay, this is known as a neckline. All right, and this is where you sell from. And as you can notice, this has been tested several times. The market usually shifts and drops right below the neckline. Okay, so that's why we get a downtrend forming this side. So where would you sell from? Immediately below the neckline. Sorry, after the breakout. Okay. So what about the inverted head and shoulders? So it's quite the opposite. So in a downtrend, market trends like this, and then you notice there's an outstanding lower lobe being formed. Okay, so you want to pick the left shoulder and the right shoulder, and you want to get a neckline. Okay, so if it's something like this, you notice that joining, you can treat this in two ways. Okay, you can join this neckline to this. Okay, and this is where you buy from. This is where you buy from, or you can join precisely this to this. Okay, and you can buy from here. You still catch the pips long term. All right. So guys, the interesting bit about this all is there is a tool in TradingView which helps you plot the head and shoulders pattern perfectly. All right, so you just need to learn how to use it, and hopefully after this session, I recommend you to go and practice it because it's not as easy as you think. So next up, I'll pick a chart and we try to hunt down this pattern. So yesterday we managed to find a head and shoulders. So today we are going to find the inverted head and shoulders. So those of you who missed yesterday's session, please refer to the videos. I posted the links yesterday in the group chat. Yeah. So can you see my screen?
Yes.
Okay. All right, guys. So I'm zooming in, and so yesterday we looked at the head and shoulders. If I see it, I'll quickly point it out. So remember, I told you the most important thing to consider here is the time frame. So you notice I'm using the weekly time frame. So that's because I'm hoping to trade this currency pair for the whole week. Okay. Why is that? You know, Monday opens. If I have a good pattern, I'll just place in the order and come back and check the result on probably Friday. Yeah, usually trading like this, it's known as swing trading. Yeah, but the the benefit of swing trading is that you get an outstanding number of pips as compared to a day trader. So those who have good patience, so the bigger the time frame, I always tell you this, the more the pips you get. So let's zoom in and try to point out some patterns. So I've seen a good pattern regarding the inverted head and shoulder. So let me try and get you a head and shoulder. Yeah, so guys, look at this. This is the weekly chart of the Euro Aussie, Euro AUD, as some of you know. So we notice that we have, yeah, we have a slight uptrend here. Okay, it's small. Okay, so this this appears to be small, but it's actually big because this is the weekly time frame. Okay, so which means the whole week market was trending to the upside. Okay, then maybe the following week, you can see the date right below here. Okay, it dropped and then continued rising again. Okay, but when it dropped, before it dropped, we had a high being formed already, which is this point. All right, then it dropped and then market price breached the previous high, so probably, and the uptrend was continuing. So, and then we formed a new high here. You can see the peak. This is the peak. Okay, good. And then, we notice that after market retested, retraced to the downside, buyers were not able to break above the previous high. Okay, so which means the sellers overpowered the buyers, and in this case, a probable downtrend was deemed to follow. So you mark out the high as usual. Yes. And before you know it, you have a head and shoulders. Okay, this is the head, this is the right shoulder, this is the left shoulder. Okay. So if let me remove this. So if you close one eye, you'll be able to see this clearly. Okay. So let me zoom in. Okay. So what we do, we're going, don't forget, we connect the lows. Okay. This is the higher low fund, and then this is the lower low fund for this. So you have to connect them to get the neckline, which will be your selling point. Okay. So I'm going to draw a neckline here. This is the neckline, and this will be our selling point. Okay, so guys, clearly you notice that price immediately trended to the downside for the next number of weeks. So if you get the short tool, let's try and gauge how much was collecting till that point. About 3,000, 3,200, about 3,268 pips. Okay, yeah, this is a big time frame. So if you traded this if you put in the sell order here and probably closed on this date, that's the amount of money you would have made. Okay, so let's go to the inverted head and shoulders and see how we trade it as well. Okay, so let's stop right here. I see I see. So this usually happens in a downtrend. Okay, so clearly you can see market is trending to the downside from this side. So if I try to point this out, let me use the channel. Okay, so we have a channel trending. Okay, yes, and then you notice we form some sort of valley here. Okay, so this is very critical, and clearly you can see that this low stands out from the rest. So you have to mark this. This will be your head, left, left shoulder, and then this is the right shoulder. So in this case, if you didn't catch if you missed to see this, let's say you didn't trade on this date, but then you came in later on here, you could consider this. They are both valid. But if you are trading every day and you are able to see this, you consider this. Okay, so I'll show you how you can plot the neckline for both. They are both valid and they'll share the same head and the same left shoulder. Okay, so let me begin with this. So this is your head, this is your left shoulder, this is your right shoulder. So beginning with this, with these two, so this will be the where will your lows be? Sorry. Okay, we have one there, and we have this. Okay, so for this particular low fund, assuming you came later into the market, this will be its high. Okay. So considering this, the head, the right shoulder, left shoulder, you're going to connect these two. I hope you see that. So let's get a neckline for them. All right. So I've connected this, and then where price breaks above, that's where you buy from. So price broke above here, so this is where you would buy. You would place your buy order here. So this was a buying point right there. Okay, but the price 0.25599. So that was a buying point. So if you consider the other low instead, so you get its high, and then this will also be valid. In this case, you connect this to this. Okay, since you came later into the market, this will be your buy point. So obviously you will not make as much money as the other this guy. So for you enter from here, and this will be your buy point. Okay, so yeah, so even if you came in late, you would still make some good money. So you would buy from the price 0.3159. So guys, clearly you can see price immediately rally to the upside. Okay, so if you get the long position tool, so let's see from here up to about 3,000 pips, and this is on the weekly. So let's drag it to here. From here up to about 500. So not bad. So next up is the tool. So, so those of you who will find this kind of difficult, though I believe this is the best and practical way, it's easier. So if you like to use the tool, it's more accurate. So you have to come on the left panel, the vertical axis, your left. This is where you find the tools, okay? So we so you come and locate this particular icon, and as you can see, it says these are patterns. All right, you can see it says these are patterns. So this is where you come to. So far we are looking at head and shoulders. So you select it. I already have it started, which means so that's why you can see it here. Okay. So if you star it, you make it as your favorite. It will always be here. You don't have to look for it. So so let's let's see. So so if I'm going to use the tool, I have to remove my drawings. But hopefully you are able to see how to draw them manually. Yeah, with with just trend lines. You can do it without the tool. So, so as for this, you have to play around with it. So you have to adjust and adjust until so so guys, it will look something like this. So this is the inverted head and shoulders. So this is the neckline. So clearly you will see the buy point. Okay, so this is the buy point here. Okay, so that's the buy point. So let's go to the previous one. I don't know where we where we found it. The head and shoulders. I think it was here. So this is the head and shoulders. So you come back, locate it. So guys, this requires some practice. Okay. You have to go to trading view tools, get it and practice. Okay, so guys, I believe that's it. So this will be your neckline, and this will be your selling point. So that's where you sell from. Okay. So so please go back, try to practice this. The tool is right here on the left. Come to patterns, look at the tool. If you find the here, there's also a head and shoulders pattern here, just next to it. This one. So try. This is the Euro AD weekly time frame. The date is yeah. You'll have this video. So you'll come back and follow through. So hopefully you are able to learn from this. So happy trading. Enjoy your evening. That's it for today. Hello everyone. Were you guys able to follow through the session?
Yep.
So if you have questions, we have a group chat. You just forward them there. If you find some good chats, try to plug them and send us your analysis. Hello? Yes, please. Yes, please.
My issue how you said the first close using
Is it Jude speaking? Hello, is it Jude speaking?
how you
How is what?
how you said the stop loss.
Okay, guys, let's do this. The session is done, so if you have further questions, ask me personally, either from the group chat or send me a personal message, because some of your networks are terrible. I can't hear you. Yes, Moses.
I'm back on Kakati.
Uh-huh.
We were supposed to talk about something. Zones level and a consolidation point.
Yeah.
I don't know if just 5 before time expires, you know?
Like 5 minutes?
Yeah, like 5 minutes.
Okay, let me give the zones 5 minutes. And then we shall pick it up from tomorrow. Okay, so let me do this very fast in under like 3 minutes. So this is kind of advanced, but everyone will get the same info. So let me go to a smaller time frame. So we have what we know as supply and demand zones. Others know them as resistance and support zones, and I prefer to call them buy and sell zones. So these are very important zones. So today we shall just point them out. So my friend Moses, a buy zone is or sell zone is valid if price rejects that particular zone more than no more than once. Okay. So what is the characteristic of a strong buy zone? It's we have what we know as a doji. Okay, a doji, and the candle formed after. So a strong buy zone, the candle strong after should be filled. Its body should be filled more than 50% of the doji. Okay, so looking at this particular point, you can see that we have the bull candle, and then we have the bear candle, and then we have the bull candle. The bull candle overpowered it, okay, and it was filled more than 50% of the bear candle. All right. So this is not a doji, so it might not be very strong, but it's a good example. So I can mark a zone here like so. Okay. So each time price comes, you realize that it keeps bouncing off. It keeps rejecting it. Okay. So price will reject this zone more than once until the sellers overpower the buyers. Okay. So when that happens, you'll see price breakthrough. Okay. So this it may come, it bounces, right? It goes up, and then at another point in time, it comes, it bounces, moves up a bit, and then it eventually breaks through. The moment it breaks out like this, you sell. So this will be a strong sell. Okay. So this will be a strong selling point. So you can have sell limits here. We shall talk about sell limits in future. So you can place sell limits here. Okay. So we do the same thing for buy zone. Okay. Sorry, a sell zone. So let me try to locate a good sell zone very fast. Let me go to a different chart. Okay, so let's stick to the same chart. So, and this can be best done using the line bar style. So, however, so I'll show you this quickly. So we have this. So if you're considering this, you have to consider this whole body, the body of the previous candle. Okay. So usually it is strong if it matches with whatever is on the left. Okay. So this is not a good chart. So always, if the chart is not good, don't force. If there are no zones, there's more than one chart. So you don't have to trade every currency pair. So let's go to the USD card. So very good. I already see a good sell zone on the USD card on the 4-hour. It is stronger if the candle formed after is big enough. Okay, so look at this. Okay, so here we have the doji, and then the bearish candle formed after. It's very strong, so this is a good sell zone. Okay, so every time price tests this zone, we expect it to to reject it.